Hey guys, this is Kyle and Adam at ProjectionHub, and we are back with another edition of SBA Burning Questions, where we try to answer questions that are coming to us from real people who are starting, buying, growing businesses using SBA. And today's question that we have for Adam pertains to if you are considering an acquisition or you're going through that process and you are using a broker to find that deal, right? So you're working through a broker that's kind of, I guess you could say, mediating or playing the middleman between you and the seller. And oftentimes, maybe as you're approaching a potential closing or working on getting the financing structured for that, the broker might recommend a lender to you, right, in that process. And is that the lender you should be using in the process? Is that the best option for you, or would you recommend, looking somewhere else?
Yeah, so just to be clear on that, like usually the business broker is representing the seller, right? And so their incentive is to sell the business, which could be good, that they want to find a lender that they think is going to be able to get a deal done because they want the deal to close, right? So if they're recommending a lender, probably what that means is they've done some deals with that lender before, and maybe that lender's already taken a look at this deal and pre-qualified it. They've looked at the financials and have, think if we find a good buyer, here's what we pre-qualify it for. But the business broker probably is also getting a commission from that lender. And oftentimes what I've been seeing is that in that pre-qualification, those lenders that do a lot of those pre-qualification for a business listed for sale tend to be the lenders that are making SBA loans at prime plus 2.75. That's kind of the standard, like high end, they're like, hey, if we get someone that's qualified to buy this business, it's prime plus 2.75. What I've found is that the strongest buyers, if you're a really strong buyer, there are lenders that are doing deals at prime plus 5, prime plus 0.75. So you might be saving 2 full percentage points on the interest looking for your own lender as the buyer. So I would just encourage you. I mean, I think it's great to have, if you have someone that says it's SBA pre-qualified, that gives you some hunch that, somebody's looked at this and it probably can get done. And that's good to have in your back pocket. But I would really encourage you to also go check your own, because that business broker is not working for you as the buyer. They're working for the seller and they're working for themselves. So get a second look.
Yeah, definitely. I think, and would it be fair to say the lenders, especially if you're a business broker, you've probably formed relationships with lenders who approve things often, right? You want to have a high degree of confidence or at-bat percentage that as you come across deals, you're like, okay, I know if I send to these people, like I'm probably going to, they're not just sending terrible deals, right? But that means it's probably a national lender. That lender is probably saying yes to a lot of things, which probably means they're willing to take a little bit more risk, which means they're going to charge a little bit more, right? So they're lowering that barrier of approval by charging a little bit more. That's how they're hedging that risk. So that's the trade-off. They approve more commonly. They're going to charge a little bit more versus, I don't want to call those lenders not reputable. They're reputable, but they just have to hedge those losses, I guess. Probably they're going to lose a little bit more, have a little bit more defaults. Whereas you go to a lender directly that maybe you're more familiar with or is doing SBA loans in your area, might be a little bit more scrutinizing, might be a little bit more difficult process. Maybe they're saying no more often, but that's the gateway to the better rate, is by going through that, I guess, more painful process and trying to find that lender. So would you say maybe the inverse of that, right? So let's say you're the buyer and you're working through that business broker and they're recommending a lender. So I agree with you that if you can, you might as well have that conversation, because if you can get an approval from them, that's probably a little bit of leverage for you. It's confidence to go out and shop it. Like at the very least, you're probably a qualified buyer if they're going to give you an approval. I don't know that you should walk into another bank waving it around being like, hey, look, someone else approved me. I don't think banks care that much to go for a competing offer, but it should give you some confidence going into that. How would you recommend them, right? So if someone's considering the broker's lender, that likely means they don't have another one. So how would you recommend they find a couple more offers that would be better, priced better than what the broker or the business broker is recommending?
Yeah, I think you could use our SBA lender finder tool, which we can link to in the description of the video, but we have added average interest rate that lenders have been charging by lender. So you can sort and filter, and then you can see yeah, you'll notice that like some lenders are just higher rate. They're good lenders. They're just, that's where they are in the market, and some are lower. So that's probably a good free way. It's a free way to take a look at that tool, find some other lenders that might be interested in the deal. So yeah, that's my recommendation. I think obviously if you want to reach out to us and have a conversation, be happy to help. You can reach out at support@projectionhub.com, and happy to do a call anytime.
All right, there you have it.